Hi, this is the weekly recap on our trades, and today is October 21st, so we will look how they will be managed this coming week. I've just loaded Option Net Explorer, and the first trade that popped up, and so it's a bit of an aside, but the first trade that popped up on the Russell is a Russell Rhino, following a request from one of you guys on the direct message for an entry setup, and I actually put it on as a demo trade in Optionate Explorer. And I think the question that was asked is, do we absolutely need to scale into full size? For the Russell Rhino, it's the first tranche is 5, and we generally add another tranche of 5. And in this case, and I believe that was also what he wanted, I decided not to scale it in, and quite frankly, I forgot about it. So this trade is looking like this right now. So we're still more or less in a sweet spot. And as you can see, if you don't scale in, there's a chance that you will end up trading this Russell Rhino in a RTT style, which means that now that we're building a little bit of negative delta, it'll be probably the slight difference between an RTT style Rhino and a RTT as such, is that I never let the delta go positive. So we could here start lifting the upper expression line, but without adding downside risk. Because if you have a stronger Vega and a positive delta, your T plus 0 will sink quite a bit. So if I was to do that, I would probably do a modest type of reverse Harvey here. Something like this. You keep some negative delta. You maybe can go up to 3. Let's go for 5 to see what we get. Delta would be flattish. I would still prefer maybe going between 2 and 4, 2 and 3 if I was to do that. So this is the aside. So basically, if you don't scale in, there's a larger chance that you will manage your trade in RTT style. Okay, since I'm on the Russell, before switching to the SPX, let's have a look at the baby I entered on Friday. Okay, so this one is okay in terms of Greeks. It looks like I didn't get the best possible entry, but it is flat enough and we've got good theta, so this trade is well positioned, and I don't anticipate a major gap. The futures were kind of flattish when they reopened on Sunday night. So typical entry, the broken butterfly is placed with the upper long puts just above the money, and you place your call calendar upside hedge around 1 to 2%, and you can actually then tune your Greeks that way. You can also tune your Greeks by playing on the shorts, putting slightly further up, further down. That's also something that we do on a regular basis. If you do a reverse Harvey, instead of playing around your shorts, you will have a very, very different Vega picture. You would do that really if the market is going very bullish, more or less the same way you would do on a monthly Rhino when you actually reverse Harvey your upper longs. So same situation, and that's why even though this is a theta trade, the baby Rhino follows the same type of guidelines and principles as the monthly Rhino, and that's also a reason why I always recommend to stick to a methodology, so that if you do various trades weekly, monthly, or even something like the giant Rhino I experimented last year, basically it's the same type of setup and it is the same type of hedges. And if you remember on the giant Rhino, the delta changing far more slowly, the management is then more on layering across cycles, basically moving capital from one cycle to the next. So it's kind of an ongoing position and not something that we do far less often on the monthly Rhino. So same methodology, the weekly is more theta based and the giant Rhino is more layer based, but it is as always, the same type of approach. Okay, so this one is doing well. Let's switch to the SPX. This is the monthly regular Rhino on November. This trade is doing well. I was hoping to get to the 2000 profit target for the week. We didn't quite get there, but it's not too far. I mean, we should be closing the trade today or tomorrow, or I will probably reduce it further. There's very little left anyway. Last week I started peeling off the trade by closing two broken butterflies here with upper longs on 2900. Then I decided to do a capital reduction, putting a PCS on 2875, 2925, and but reducing capital by balancing it out with um, 3 PDS on the lower longs. Basically, it was a short, unbalanced condor. And then on Friday, because of potential jitters, Brexit motivated jitters, I actually scaled down quite a lot so that the trade would have very little Vega, but of course at the same time it lost quite a bit of theta. But we don't need much theta now that we're approaching profit target. So this trade is fine, it's just a matter of closing it now. For those who really want to make it last longer, it's also possible just to carry on with this type of wild card with just a bit of negative delta, no theta, and the possibility of reaching a target on a pullback. But that remains to be seen. The market's still congesting in this area, so if you have several rhinos on, maybe close most of them and keep one just to play with like this. The BTB variant, we could call it the classic Rhino or the beginner's Rhino. The by the book Rhino has fewer adjustments available, but really in this instance, for this cycle, didn't make much of a difference. And exactly the same way as I did on the regular Rhino, I also scaled down in the same way. Actually, we had even one adjustment that was exactly the same. So basically the same type of capital reduction, flattening delta, uh, improving the upper expression line. So really, I would say that this falls in the same convergence that I've been mentioning several times on several occasions, that in a normal volatility environment there should be one rhino. That said, the regular rhino will always have more additional layers, but if you don't have time and if you don't want to tweak your trade too frequently, of course the BTB is the trade to follow. So this one is also doing well. There's only two broken butterflies left. It for change. I mean, in the last few months, the BTB has done better, but this one is lagging slightly behind. But still a good profit. We should get to maybe 1750, which is um, a good 8%. Sorry, a good 6 to 7% for the month. So nothing to complain about. And lastly, a look at the December trade. This one is doing absolutely fantastic. There's not much. You have realized that in the last week or so, maybe starting actually early October, I've started layering a little bit, localized layers, i.e. smaller broken butterflies on the upside. So by being localized, we just add theta and we take less risk, less directional risk than going with straight PCSs. By sticking to broken butterflies of narrow wings and positioning them where the market is congesting, we just add theta, but we don't add much risk, and that's what I would recommend for the more conservative broken butterfly trader. So this trade is doing absolutely fine, 942, and the one without those additional layers, the B2B, is doing more or less the same. Those trades have no upside risk. They are in the sweet spot. They may be suffering from little theta in this area, but also Vega is not too bad. And since VIX has dropped, we can't discard the possibility if there's a sudden shock to the markets that we would have a possible T+0 flattening quicker than expected, even with vol surfers being enabled. So those trades are doing absolutely fine. We are now still, let's look at the December, this is how it looks. 60 days to December, so 88 days. The January entry should come in about 2 weeks. Generally an entry is the beginning of the month anyway, and so we'll look at an entry. This time we have absolutely no capital constraints whatsoever, so if the vol pop occurs before 7070T, I may actually look at entering early. Okay, that's it for this weekly video, and as always I will be available on Slack and mostly during the first 2 to 3 hours of the trading day. Thanks for watching, and bye for now.